supply and demand. What is this? For me, these are zones where I believe in the past were placed very big orders, and if I see that the current price action is going there, is very close to the drawn zone, that the actual traders, the biggest guys, also want to put there some large limit orders. So for me, this is a previous old zone where can be still sitting some limit order, and the actual fresh ones put there or set there like few minutes before activating these. So how I recognize them? I love to draw them basically when I'm opening my charts at 1 hour time frame. And what I am looking for are the big candles. I call these leg outs. So when I see indecision candle and then huge shot to the upside, even if the move was in continuation, for me this is the demand zone. So I'm focused not on the lows, only on lows or highs or similar candles. It need to be really short. So the leg out need to be very big. Bigger leg out for me, better zone. It means how big order needed to be placed to move the price so high in just 1 hour. Let's use let's measure, for example, this one here. In 1 hour it was 28 pips. It is really big move. Or here, yes, the price moved over 30 pips. So the first thing to remember in easy words is just a big leg out, big candle. Also important for me is to check if the leg out has a bigger volume than the previous candle, which made the base, yes, the zone. So I'm always checking if the leg out really has bigger volume, because I like to see the prices followed by the candle. So same with supply. There's some rejection with really good candle. The leg out has a lot of volume, so I would say that here was placed the big order. At that moment I cannot know if this is the limit order or really market execution, but the price moved down. So probably in future, when I see the price action is, for example, somewhere here, I could expect another drop. So please be focused on big candles. To make less mess on the chart, please always delete the broken zones or the invalid ones. As for example here, this huge leg out could be a sign that, wow, what a big order was here. It's that we can expect some buyer's pressure. And also we need to know that if there were so many demand zones, this cannot be endless process. So every next demand on the uptrend is with bigger risk that this is maybe finally the end of bullish pressure. So if the zone is broken, as we have the move here, I would really delete this one, and I am not trading swap zones. I am looking always for a reason what broke the demand, why there were any orders. So I'm not using the swap, but the supply in this case, which caused the break of this demand. So don't have mess, don't try to trade swap zones. Of course you don't need to listen my rules or this ideas, but I see some logic here, and this is how I trade. So don't create any mess, because sometimes I see a lot of broken zones, valid, invalid, too many markups are not good for our eyes, for our mind. Another thing what I'm drawing are, in this case, the golden levels. So these are price levels which were broken by created supply or demand. Why I am doing this? To find also the TPs. Let's say that we are somewhere here. Yes, we see that price created the supply and price is going down, 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 and we are very close to the marked demand area. So if I just open my charts or I'm waiting for a while, I would be looking for a buy position. But I need to remember that I am a scalper, not day trader. So I don't want to catch massive wave as from the zone to the zone, like from somewhere, for example, here to the zone as 56 pips, because I use just 3 pips SL. Yes, I'm a scalper, I want to catch fast wave, and in this case, if this supply broke the main low here, it could be like 21 pips. It is 1 to the 7 risk to reward. 7% up if I'm risking 1% in maybe 1 hour. This is the reason why I'm looking also for the broken lows or highs. Same as here, as the price created the supply was going to the demand, so I drew the line to see the potential take profit, to not sitting too long on charts. But yeah, I now notice that I'm talking too much about take profit levels. This lesson is about how to draw correctly the supply and demand, and just wanted to explain why these broken lows and highs below zones or above zones are important. Yes, in this case it was also 24 pips. So I like to have these levels with my zones. Also, do not forget about the key levels from previous lesson, and then you can have a picture where to aim for, if something is worth the risk or not, if these distances are nice, yes, are something we want to really catch, not 5 pips, but 15, 20, 25. So the correct markups are very important. I hope you are doing some notes. There comes big rule, or we can say law with supply and demand, that if we have two zones very close to each other, as here, this is distance for like 7 pips, there's a big probability that the price, when it's going to the first demand, want to also reach the second one. In this scenario, it didn't happen, but we need to have this in our mind when we are looking for a buy in the higher demand. This is the same with supply. If we have two supply zones very close to each other, like just few pips on the higher time frame, there's the big probability that there will be spike or one big candle, or even still continuation of the move to the lower or higher zone. Please take this in mind. This is very important. So this is how I'm drawing the zones on higher time frames, with a candle which caused the move and also the broken previous high or low. I'm drawing the zones a bit different on the lower time frames as M5 and M1. I'll just show you the M5 to not make this lesson too long. I prefer to watch not on candles as a leg out, like on the 1 hour time frame, but at the whole wave. If I see the big wave as here, which is breaking the structure, breaking all previous lows, for me this is the supply. Something happened that pushed the price so strongly down. So on the higher time frame, I would draw just a zone from this one candle, which caused this big break. But when I see more price action, is more candles, more moves, I prefer to mark the whole wave, the opposite wave. As here was the bullish move, uh, which gives some logic. Yes, on this range here, this whole range, the sellers were preparing to make their move, but it would be nice and better to have a higher price to sell. Yes, everyone likes that. So they pushed the price higher, were playing, and then was the boom. So I'm marking as a base the whole opposite move. The same as I drew here my demand on the lower time frame. Big range, they were just, yes, I'm just creating some kind of little stories in my mind to make it easier with making my decisions in future. So for me, this is the creating the pressure. The buyers were almost ready to make their move, so they lowered the price as the buyers to make it true buy. Yes, it was insane move, like almost 40 pips. So I don't see here any leg out as on the 1 hour time frame, but I see here big wave after this range. So kind of manipulation move, we can say. So I'm drawing the base from the whole opposite move to the true one. Let's see if I have something more here. This is not clean. This is for maybe in more advanced level when we will be talking about liquidity. He was created very small shiny support. Yes, so the buyers were ready to take their position, so they lowered the price for a buy. Not so clean, but I marked this. Yes, I just marked this. This is about next steps. Here, wonderful ranging market. The last push to the up to get a bit better price, to manipulate the early buyers to make the really true sell. So not just a candle like here with a leg out, but please remember the whole opposite move. This is for those who prefer only lower time frames, to not waste their time or anything else, and the high time frames to make the markups. They are really scalpers for smaller waves. But I really like to have a look on the M5 when I want to see if the distance between what I want to aim and where the price is currently is really worth the risk. As if I have small M5 supply and demand of the ranging market, yes, these lower highs were broken to create a fresh high. So I see this wave as a demand, and I can compare this if I'm looking for a buy anywhere here. If this is good, yes, 22 pips, wow, it's something interesting. Yes, I would not look at the supply here because here also could be something drawn because of mass, because of a lot of price action here. We need to remember that more touches of supply and demand, longer time price spent there is making weaker the zone. So if I see that the move was not sharp, yes, the supply, the sellers didn't push the price so low, I'm not looking at this on the lower time frames, of course. So I'm not afraid about taking a buy because this is just 9 or 10 pips. I see that here something happened, yes, so big move to the down. It was like the initial move before bigger pullback was 40 pips. It is, wow, it is a lot. So I like to read. This is analyzing all the time the charts, not only drawing few key levels based on volume, not only drawing Asian high and low, not only drawing the supply and demand on higher time frame like daily, 4 hour. These zones are then big, like 30 pips as a base. So it is good to see the 1 hour time frame zone. Sometimes I'm drawing also the M30, but then to compare everything in the M5 before I'm even thinking about making the entry. If really the game is worth my risk, worth my money. So drawing the correct zones is very important. Yeah, this is where we are looking for buyers, pressure and opportunity to take a sell. Very important lesson. This is the one of the one of the basics of this strategy, to know where potentially we can join the market. So at first, if the lower time frame can be confused, please really be focused on the higher time frame zones to draw them correctly, and yeah, and then watch what price is doing if it's really rejecting. So here on this part I mentioned about the law or rule that we need to have in mind if there are two zones close to each other. But I also want to mention that about volume. If we have the smaller zones and we are managing our trade in future, or looking for entry, or thinking about moving to break even, anything, this is about reading the zones. The decreasing volume when price is sitting or hanging below the zone, decreasing volume is making you feel safe, as is the high chances that the zone will hold the price and we can really expect the rejection. If, for example, like here, yes, price was hanging below the supply and the volume definitely went down. So it is like no one had interest to buy, to break this, that this is really true supply. Here, when the price was sitting on the demand, I see that from almost nothing the volume went a bit up. So it was the like information, hey Seb, please don't take a buy, volume increased, the price can still go lower, yes, or even break the zone, make it invalid. That maybe really the sellers were so strong that this demand has no chances. So please always take in mind the volume, especially later in advanced course when the volume bars are way easier to read. I think that's it in this lesson. So now you know how I'm drawing key levels, what is important about supply and demand. So you are one step closer to look for entries based on this tick volume.